to avoid false breakouts. Hi, it's Charlie giving you Saturday's video. I hope you're very well. So this week I've been literally inundated with an email, and the actually it wasn't an email; it was a message on our channel here, and just been asking about false breakouts. So this person said, "How can I avoid false breakouts of support or resistance, or of things like trend lines as well?" How can he go about that? Is there any other confluence that he could use? And so, of course, as always, I welcome any inputs that you might or thoughts that you might have. I'll give you a couple of thoughts in this video. So we've actually got a nice choppy chart of the euro dollar here. And actually, if we take this back to here, we could see that we've had this range here on the euro dollar, and we could have capped that maybe across here sort of thing and down here. Okay, so you could argue that there was a minor break back here, and that turned into a false breakout. So how can you maybe avoid that? Well, one thing is it went straight into its 50-day moving average, so you might want to wait and see if it got a confirmed close above that as well. But generally speaking, there are some things that you can do. One is you can wait for the break. So if you've got a false breakout, or sorry, if you've got a breakout of a trend line, or oops, wrong pen. If you've got a trend line or a horizontal breakout, let it break, and then wait for a retest, and then a confirmed retest once it starts to bounce off the retest. And then once it's bouncing, then you can go in there, and then you also know where to put your stop, because it's actually created a short-term low here as it started to bounce. It's still no guarantee that it's going to work. Of course, there are no guarantees in trading. Forget what people tell you about guarantees. There aren't any. But that is a way to say, right, what I'm going to do is, in order to avoid false breaks, or to at least, should I say, cut down the number of false breaks, I'm going to have to be patient, and I'm going to wait for a retest of the breakout zone. And if it does retest, then start to bounce, then I'll go in then. What's the counter argument to this is that what if it just breaks and goes? Well, you have to just accept that you're going to miss out, because if you're saying, well, yeah, but I don't want to miss out if it breaks and goes, well, just take every false breakout that you want to trade then. So you can't have your cake and eat it, unfortunately. That's the bottom line. There are some other things that will take place at times on a breakout. So let's actually get the pen back. There are other things that will happen, and that could be, so let's say you've got some horizontal resistance there, and prices breaking out, is to look out for things like divergences. So it might be, you use a typical sort of divergence indicator like an RSI or even a MACD or whatever, but actually the RSI indicator is diverging downwards as price is breaking out. You might not always have that though, so it might not always be there, but that would be something to look at as well. And the other thing to look at is if you're looking at a breakout, should I say here, and let's say this is on a 1 hour chart, for example, we can always go up the time frames, and see what it looks like on the likes of the 4-hour chart. Is it confirmed yet on the 4-hour chart? So it may have closed up above that level on an hourly time frame, but it might not have closed on a 4-hour. So you can always wait. You can always wait for a little bit more confirmation and go up the time frame. Say, well, instead of me buying it on the hourly, I'll wait until the 4 hours close. But again, like I said, there's no guarantees, because the 4-hour could close up and it could still come off as well. But these are things that you can consider to try and not get in so aggressively on the breakout if you're worried about false breakouts. One thing that I used to do years ago was, I'll show you a pattern here, is where if you get a price pattern where it makes a high, makes another one, and another one, so you get sort of 3 highs in a row. They're not going to be exact, but they're roughly there. and then it pulls back again, and on the fourth attempt, so you get 1, 2, 3, and then on the fourth attempt it actually tries a proper breakout. And I used to trade this pattern years ago, and because what it's saying to me is the price is back knocking on the door of whatever this price zone is, and it keeps attempting it, so I see it as a potential breakout zone. But actually, I used to do this on an intraday basis, so this used to be on, like, intraday charts. And so if it then broke out on attempt number 4, so I wouldn't be bothered about the first 2 and 3 necessarily. So what if I saw this pattern where there's been 3 attempts at least, and then on the 4th, or it might be on the 5th, depending on when I saw the pattern, if it breaks out, then right, okay, then I would buy it. But funnily enough, there became a point where I was getting it seemed like there was more false breakouts than the ones that actually worked. And so what would happen is I would notice that price would come down, usually take the last low out, or any of the lows that have been created in this pattern, so at least the last low that it would take out. And of course, where would my stop be years ago? It would be below that low. So enough to get me stopped out. I would then, okay, fair enough, move on, forget about it, because that's what you do when you're trading. You trade didn't work out on that occasion. And then what I noticed was that over a period of time is that, hold on a second, I'd come back to this, several hours later, and the sneaky little so and so, it would sort of stall down here and then gradually start to come back up over several hours, and before you know it, later on, whatever the time frame is, it's come all the way back up again, and then goes for its break. So I actually adjusted the entire strategy where I wouldn't buy the break anymore. I'd look for a break and then let that become, if it was going to become a false breakout, if it came down and took out the last low, I would see that this zone here is the buying opportunity. So I'd see this zone here as the buying opportunity, and then by the time price had even got up to those prior levels, I'm already at a good risk reward because my stop's below the lows here. So that was just a little, I'm going off on a tangent here, but talking about breakouts or false breakouts, and that was something that I did from an observation around trading breakouts that I changed something in how I approach that. But that's a specific pattern there where there's been several attempts. The question that's come through has not been necessarily about that. I'm only going on what he's talking about as far as trend lines and stuff. So if you are looking at, I'm not generally a breakout trader. Let me just make that clear. I'm not generally. There will be times when I've seen consolidations and stuff like that, but most of the time I'm not a breakout trader. But I appreciate lots of people are, and so have a think about checking for things like divergences on the breakout and going up the time frames. And I can't think of much else, but if anyone wants to add anything more, then by all means do so in the comments below. Those answers actually were, I put this to our room members this week, and those answers actually came from our room members. Honestly, I would have come up with that myself, but I was doing it as a trading session with them as well. So there you go. There's the video for today. As always, do give us a like and do subscribe to the channel if you don't already do so for further updates. Take care for now. Enjoy your weekend.